You're watching Virginia This Morning.
Well, welcome back. Our next guest is here to pass along a few end-of-year financial tips that you can use right away. We welcome money expert J.B. Bryan back to Virginia This Morning. Good to see you.
It's good to be here.
And we're going to do everything in black and white today. You're in black and white.
That's
I'm in
right.
black and white. And it's
Coordinated.
just as clear as can be.
Yes, indeed.
Let's start. It is the end of the year, and we got to kind of get ready for the next year. So we got some financial housekeeping to take care of.
And I think that is the most important thing that everybody should do at this time of year. I love the year end, and I'm probably a geek about that, but at the end of the year, it's an important time to pull all of your financial things together. And in many cases, you only need to keep that year-end statement that you'll be getting soon that will have all of the transactions that you did during the year with that particular financial account. So it's important to do that, also to focus on the fine print that you might not have noticed for those accounts.
I thought that was your job. The rest of us to say, Steve, JB, help me with this.
I know, right? It is. It is my job to hand you the fine print. No, but really, we do have to take some time to read it, because wisdom and wealth, to me, go hand in hand. And when people aren't conscious of those little fees, those little transaction late charges that you're getting on your statements that you're not noticing, then we need to take this time to really look at it and look at what is going on with our dollars, so that you'll have more to save for yourself and to use for other bills.
Okay, so we got that required minimum distribution is the next thing on my list that I read in the fine print here. What's that?
And it only applies to people like you. 70 and a half. I'm just joking, but it is.
Ow! All right, well, it's been nice having you.
I can only say that because you're so good looking and so young.
Yeah, right.
But definitely at 70 and a half, we run into some requirements that the Internal Revenue Service is required that you begin to take out certain amounts out of your retirement accounts. So if you haven't done that, I encourage everyone to call their financial advisor and investigate.
So if you're getting close to 70 and you haven't been taking it, I'm going to keep putting it in there because I want to save it. No, you got to start taking it out.
Yes, because they're saying you've been saving it.
In that situation,
yeah, because you've been saving it without paying any taxes on the earnings for so long that it's like, hey, we want a little bit of that now. So you have to start taking those withdrawals. It's called your required minimum distributions, and they do send you a notice, but a lot of times you don't open the mail. So.
Yeah. All right. Speaking of things we got to do immediately, the health care exchange today.
Great commercial. You probably didn't see it, but I was in the waiting room, and Anthem ran a great commercial. Not to really to say their product is the best, but their commercial talked about, did you know there are deadlines, and if you want to have your health insurance effective for January 1, then you need to make sure that you did the renewal by today. You have until like midnight. They're there all the time.
So as soon as you get done, people
take
can
care
call
of that.
you. Okay.
Yes.
All right. A lot of folks know about 401ks or IRAs, individual retirement accounts. Do we need to act on those now?
They don't know that they can set up the account and not fully fund it for this year. So if you don't have a lot of money, but you anticipate getting some money for in 2015, and you would like to make a tax deductible contribution for this year, 2014, open up the account now with whatever the minimum is required to put in it, so that you can make those contributions for this year, next year.
All right, we had Hugh Joyce on from James River earlier, and he was telling us about some good work they're doing.
Yes.
Now's the time to make a charitable donation and get the tax break on it.
Very good point. And many cases this year has been a good year for many investors, and they have things that are appreciated. Their value has increased. And instead of paying that capital gains tax, you can give that deductible stock that I know you have, because you're the man, and you give that stock that is
the old man a minute ago.
That's right. Old rich man.
Yeah, right.
Old rich good looking man that has appreciated assets.
Yeah,
you can give it. Yeah, you can give that whole appreciated asset to the charity. And then you'll be able to write it off instead of paying taxes on that capital gain.
Okay.
So if sometimes people will sell it, then make the charitable contribution, but you can contribute that so that you can avoid the capital gains tax.
Right.
That's challenges for the rich and famous like you.
Yeah. Yeah. All right, you've got a seminar coming up on Wednesday.
Definitely.
Why don't we get folks signed up for that?
Yes, and it's free, and it's just about these tips, expanding on them so that you can think about how they affect you personally. But it is free, so take advantage of it, either coming in person or you can even participate via teleconference.
Okay, take it from the old guy. This girl knows her stuff. JB is offering a free teleconference and live workshop on this very topic this Wednesday, the 17th, noon, and then again at 7 p.m. It doesn't go for 7 hours, just so you know. 4860 Cox Road, Glen Allen. Registration is suggested. For more information, head on over to our show website at WTVR.com/VTM, and I guarantee you, if you go see her, you'll not only learn a lot, you'll have a good time. Cheryl, we're going to send it over to you.